Hi there, good morning. My name is Victor Alui, and I'm the head of investments at Sankore Global Investments. This is your weekly financial market roundoff. We start off with the US markets, where stocks declined on Friday as investors assess the fallout of the weak August jobs reports. The S&P was down 1.73%, the Dow lost 1.01%, while the Nasdaq shed 2.55%. Friday's decline really closed out a rocky week for equities, with the S&P losing 4.3%, its worst weekly loss since March of 2023. The Nasdaq lost 5.8% for its worst weekly loss since 2022, while the Dow slumped about 2.9%. Essentially, a bout of weak economic data has sparked concerns around the health of the U.S. economy. We saw non-farm payrolls coming lower than expected at 142,000 jobs against an expectation of 161,000 jobs. We also saw downward revisions of about 81K for June and July job numbers. Well, again, reinforcing the fact that the labor market has certainly not been as strong as had been thought before now. So recent sentiment really has been largely driven by broad macro concerns really for the U.S. economy. The market really seems to be looking for some direction, and we're likely to get that from the Fed outcome or the end of the Fed meeting that is happening next week, where the market widely expects that the Fed is going to cut by about 25 basis points. However, recent economic concerns are kind of pointing to the possibility that there could be a larger cut of about 50 basis points. Nevertheless, the market has priced in a 71% chance for a 25 basis points cut, while for the 50 basis points cut, the market is pricing in just a 29% chance, that happens. Going into the remainder of the week, we really are likely to kind of open this week higher. As a matter of fact, futures are already higher, just on the back of the fact that, the market was really down last week or to quite some beating last week. So we're seeing the chance of the semblance of some sort of recovery. However, on the data front, two key data points will be put out this week, two inflation data numbers. The August CPI and also the PPI will be released on Wednesday and Thursday, respectively. Now, these numbers will prove very, very crucial in determining, what the Federal Reserve does, going forward. So for the U.S. markets, really, inflation data will prove really, really crucial in dousing or probably strengthening the macro concerns that have kept the market sort of, weighed down over the last 2 weeks thereabout. Over in Asia, markets open weak today, lower today, really. Japan's Q2 GDP came in lower than expected at 2.9%. The expectation was that we'd see a 3.2% number. Also, inflation in China came in lower, 0.6% year on year, as against an expectation of 0.7% year on year as well. Again, these deflationary concerns continue to take hold, in China. So for the markets, really, you saw the Japanese market, the Nikkei 225, end today lower, 0.48%. The Korean Kospi slip about 0.33%, while the ASX 200, that's the Australian benchmark index, was lower by 0.32%. Now, on crude oil, there's been some development around the crude oil market over the last week or so. We saw prices really slump quite significantly. Last week, it was down about 12%, and this took it significantly below its starting points this year, basically. So year to date, crude oil prices are down, and we saw it hit its lowest point in about 18 months. And all of this has really been spurred by, demand concerns really from China. Demand has been weak, so also we're seeing a bit of overproduction from some OPEC Plus members, particularly Iraq and Kazakhstan. So obviously you're seeing, demand side challenges really coming from China, and they are getting the supply side concerns as well from overproduction from a couple of OPEC Plus, member countries. And as a result of this, OPEC Plus, which was slated to bring back about 180,000 barrels onto the markets in October, is looking to, push that forward to probably sometime around December, just to ensure that the market is, properly balanced. I mean, this has been part of, the plan to restore about 2.2 million barrels that was sequestered from the market some time ago, just to restore it gradually. 180K was meant to come back in October, but that is being pushed back now, particularly given the state of the oil market, just to create a bit more, balance in the market. Locally here in Nigeria, last week, liquidity was quite tight, on the back of OMO auction settlements. We also saw remitter outflows and also CRR debits, which basically left the system in a deficit of about 276 billion. Hence, OBB and overnight rates closed at 31.2 and 31.7% respectively. The T-bills market opened last week on a cautious note, really, particularly as there was an auction on Wednesday. So the market was really looking to the outcome of that auction to kind of get some near-term direction. The DMO sold a total of 233 billion worth of bills across, various maturities. The participation at the auction was quite decent. We saw a bid to offer ratio of about 5.27 times, about 223 billion worth of bills was eventually sold across all maturities. But worthy of note is the fact that we saw a significant decline in stock rate across tenors. At the long end, it declined by about 189 basis points. And this is a trend that has kind of continued over the last couple of auctions. Again, seems like the DMO is signaling an end to the high rate environment that we had seen over the last couple of months. Whether that holds true, in the medium term really remains to be seen. Also, the sentiment was, largely the same at the bond market as well. Because if you look at the bills market post-auction, there was a really, really strong demand such that even the one-year paper had declined by 100 basis points immediately after the auction because there was a lot of unfilled bids, of unfilled demand that essentially filtered through into that secondary market looking for that 1 year paper. Again, like I said earlier, the sentiment was largely the same at the bond market throughout the week. For this week, really, there's another auction on Wednesday, and this auction will really prove crucial, giving us clues as to how low the DMO is looking to take these rates or whether they are comfortable at this point. So the outcome of the auction this week will really, really prove crucial in giving near to medium term market direction. We're also looking to likely see inflation data before the week runs out or over the weekend, while the MPC is going to meet, I think, third week of this month. So all of these data points will prove very crucial, really determining what the Monetary Policy Committee does. So for our local market, really, I think the key thing to look out for would be, the outcome of the bond auction. While on the international front, we'll keep an eye on the CPI numbers that will be released on Wednesday. That's pretty much it from our market roundoff. We hope that you have a very, very productive week. Thank you very much.